Hey guys, Boris Schlossberg. Welcome to our weekly Forex technicals for BK Forex for 5/13/5/20 of 2013. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. So I ask you to read this disclaimer very carefully and understand all the risks associated with trading foreign exchange on margin and seek advice from an independent financial advisor if you have any doubts. Well, definitely the story of the day or story of the week this week was the breakout in the dollar across all the pairs. Dollar yen is obviously the most obvious one, but I think I want to start with euro dollar because it broke some key support levels, but then came right back up, which is why I'm a little dubious as to how much more strength there is in a dollar rally just for the near term. Let's go to the dailies. Let's take a look at the daily charts. So the interesting thing here is that yes, we've been talking about the fact that 29.50 is an absolutely critical support level for euro dollar. And basically, euro has just sort of been trading in this 32.50, 29.50 range for the good part of a month and a half. And today we did break the 29.50 level, but as we are closing for the New York session at the end of this week, you can see one interesting thing. It came in essentially as a value zone here. In other words, they didn't close on the lows of the day. They bought the 50s, they bought it back up. Now, will it get retested? Possibly, but the critical thing to me now is whether the 29.50 is now turned into essentially a test of a double bottom. And we could continue to perhaps rebuild the euro towards the 30.50, maybe even 31.50 as the range conditions persist. If that is not the case, if the euro breaks down, the key breakdown level here is probably going to be around 29.25. Then we target 29. We go deeper into the deterioration mode, and then basically I think if we break 29.25, excuse me, we really have a very reasonable chance to make 28.50 and possibly even all the way down to 27.50. That would complete a very, very big distribution pattern. But for now, I think the jury is pretty much still out. And the fact that the lows would not close on the lows, and the fact that we kind of bought the lows here as the end of the day closes suggests that there is still a lot of bid underneath for the euro at this 29.50 level. May not be as a vulnerable level as everybody thinks for the time being. Still very much worth keeping an eye on, but not wholly convinced that this is a wholesale sell-off in the euro that continues to the downside just yet. Dollar yen, on the other hand, is of course very, very different story. Major breakout this week. We took out the absolutely seminal 100 level, and as I noted in my weeklies, actually we're gonna have to go again back to the weeklies to the 10-year chart to see this. We did come into a little bit of congestion at the 101.50 level. This is the 101.50 level. This is a 4-year, essentially, right around here, basically, a 4-year congestion zone. So it's not unusual to see the dollar yen kind of stall a little bit here, and it's quite possible that on a short-term basis, let's go back to the 30-minute chart here for a second, that we could have a small correction back out towards the 101, possibly even the 150. For now, of course, 100, which was absolutely major resistance, now becomes absolutely vital, clear support. And unless we have some sort of seminally bad news for the dollar, it's unlikely we're going to completely collapse and take it all the way down to the other side. If we do have a retrace, it's probably going to be the 10100, 10150, and there'll be value buyers over there. But for now, I think what's basically we've established is that the 100 to 102 zone is the new range. 102 is the new breakout zone towards the 102, 105 level. It'll probably take a couple of days of consolidation before we push to those levels. If we do, we may just simply be digesting here for the next 3 or 4 days as this massive rally kind of absorbs itself in the marketplace. Similarly, the story in the Aussie is very interesting. Aussie, of course, broke the par barrier and then bounced right back up right above par. But the break here is pretty seminal, and I think is definitely a long-term negative for the Aussie. Let's just go back here. We haven't broken. Again, I'm going to have to go back to much longer charts here. We haven't broken par in a long time. We haven't broken par since last year. And you can see that the break here was pretty significant. We came back up, then it kind of retested it here. Here we're doing the same kind of a thing. Parity is definitely a very, very sticky zone. And generally, I think the downside here is sort of contained initially to the 98 barrier. So sort of 98, if you look at this on a longer term charts here, maybe let me switch this to weekly so we can see this a little bit better here. Let's go to 3-year weeklies. The 98 par is probably going to be sort of like the bottoming out area, because this is a very, very sticky area, and I don't think it's, Aussie dollar is going to just slice its way all the way down to 95 in one single swell swoop. So we may have more distribution here. Definitely the path of resistance in the Aussie is to the downside here. But we're now entering into a longer term support area here, and there's probably going to be some value buyers here. Probably Asian central banks who are still diversifying and want yield are definitely going to park out underneath here and try to scoop up the Aussie at what they perceive to be value proposition prices. So my point is, I think we do have some downside, but the downside is going to be relatively limited towards the 98 level as we proceed going forward. Cable had a big rejection. This is a weekly chart, so you can see this sort of on a single frame. But if you look at it on a daily chart, there was about 4 or 5 days where we just simply rejected the 56 and could not take it out. And this, of course, caused a pretty big sell-off. Took out actually quite a lot of support. We took out the 54, 55s, 54, 50s, and 54s. Very negative, ugly candle for cable. And also, if you look at this on a weekly basis, it's basically a pretty serious reversal candle. So despite the fact that UK data has been relatively strong, and despite the fact that we've had a very, very strong rally in cable, this kind of a technical signal is a big flashing warning sign that there may be more weakness to come. So at this point, cable definitely is capped at the 56 level. This kind of reversal candle that took out the lows of the week prior and now is kind of inching towards the lows of the week before that, which would be around 52 level, is quite possible. We may distribute all the way out to 52 before we find some more stiffer support for cable as we proceed. Any bounces back up are likely going to be rallies to be sold, especially up into the 54s, 55s, as this is going to be pretty much a dead cat bounce given the very, very severe sell-off in cable. Lastly, I kind of wanted to look at dollar CAD just for a second, which has acted quite well to the caddy side. That is, bullish CAD, bearish dollar CAD. We had mildly negative employment data today that pushed dollar CAD above the 101 level. But if you look at it from a longer term basis, there's definitely some continued downside pressure. Parity is still clearly a very, very important level for dollar CAD to overcome. And just like in the Aussie, it's going to take a few attempts to want to try to overcome parity. Having said this, though, those who like to buy bottoms, sell tops, this is an interesting signal here on the weekly. We basically tested parity. It came back up to the highs. So a possible counter trend move here all the way out to maybe 102s, possibly even to 102.50s, not out of the question. Getting long here against this low over here is a relatively low risk proposition from a point of view that there isn't much pippage here. There's about 100 points of pippage. And the fact that we could not really hold the lows suggested that there may be some buyers here at dollar CAD near parity that is relatively sticky. So worth considering if you're doing some spec trades on dollar CAD. So just in summary, basically, where do we stand here? We stand, I think, clearly in a dollar rally mode. The strongest dollar rally mode is, of course, in dollar yen, but even there, we've run into very long-term resistance at 102, 101.50, and likely to kind of consolidate, perhaps, and chew a little bit the distribution here. Perhaps come back down to 101, perhaps even down to 150 in order to absorb this massive rally that we had. Top side, if we take out the 102s, would be an uber bullish sign. That means that there's just so much momentum here behind dollar yen that we probably could run all the way to 103s, 103.50s before we find exhaustion on that pair. But between 101.50 and 102 is a long resistance area, and one that I think you should be cautious about trying to get long at this point. Euro dollar is the reverse. We tested the 29.50. This is all weekly charts, so you can kind of see this very clearly. Tested it on a double top basis and did not break it, really. We broke it on an intraday basis, but not on a closing basis, and that may give some Euro bulls some hope that this is a near-term bottom. But the top side is sort of limited to 30.50, 3100, and on a very, very longer-term basis by 32.50. We continue to be essentially range-bound in the euro dollar. We really have not broken the range. The range break really happens if we close below 29.25. That would be a break of the range, and that would suggest that we distribute all the way down to perhaps 27.50 as we go forward. And you can really see this very, very crisply on the weekly charts. And then lastly, Aussie obviously looks very negative. Par was broken, although not quite held on the closing basis, but close enough for government work. And the level here now is par to 98. The sort of the next distribution level is par to 98, where there's likely going to be some support here, and certainly some support at 90, 96, 97. As you can see, this is a longer term support here for Aussie. So there is some downside, but the downside is contained for the time being. Wishing you guys the best of luck and the best of trading for next week. What an awesome week in trading this has been for FX. I hope you guys all enjoyed it. As always, trading foreign exchange on margin carries a high level risk and unreasonable for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading foreign exchange on margin and seek advice from an independent financial advisor if you have any doubts. Boris Lasberg for BK Forex, over and out.